From the real estate, interior design, and design and build experts at the Penzo Group comes a podcast that covers all things home. For our team, a home is so much more than the sum of its four walls. It goes beyond. A home is our sanctuary, a place to create memories, build routines, and shape our futures. Through a series of captivating conversations with guests who are industry experts in their fields, we discuss their lives, passions, and their most personal and intimate spaces, their homes. Welcome to Beyond Four Walls, where we explore the soul of living spaces and celebrate the essence of what makes a house a true home.
Hi, everybody. It's Debbie Penzo here from Chestnut Park Real Estate, and we're here on another episode of Beyond Four Walls. Today, my guest, Jason Cristiani, is a distinguished mortgage broker with ClearTrust. He is known for navigating the complicated mortgage industry to find the solution for homebuyers. Hi, Jason.
How are you? Thanks for having me.
Tell us a little bit about your background, Jason, your experience in mortgages and the background with ClearTrust, the company.
So my experience with ClearTrust started about 3 years ago. Prior to that, I was in advertising and marketing. But I had a background in finance throughout university. And during COVID, there was an opportunity to make the switch. And that's what I did. And since there, it's been a great switch and excelled at it.
Well, you've got a great personality for dealing with people, so I can see why you're excelling at what you do.
Thank you.
You're welcome. I want to share something with the listeners. Jason came with some pastry today, and the pastry had a card on it that said, "Marry the house, date the rate." And I love that. We're in the business of selling houses. And you're in the business of giving rates that not your own rates, but
Correct.
The best ones you can. And I think that's an awesome tag because people today are navigating the real estate industry and hesitating on purchasing or listing because they're waiting to see what's going to happen with interest rates. In your opinion and your expertise, what do you think is going to happen this year with interest rates?
So right now, it's a difficult time to navigate. BMO came out with a report last week saying that by Q4, interest rates are going to drop by 100 basis points.
Okay.
However, the new job report that was released on Friday showed increase in the job market. So I think that's going to be delayed by another quarter.
Oh, I agree with you. Do you think maybe a quarter point in June? It could go down a quarter point by June?
I think starting in June, it's going to drop by a quarter point, but that's also to be determined by how the inflation numbers look, how the entire landscape looks.
Yeah. Okay, so given that information and people are out looking for properties, what advice would you give to a couple going out to purchase a house on what type of rate? Like if they came to you and said, "I've found a house I like, Jason, and I need you to find me the best. What should I do?" What advice would you give them?
So right now, there's a couple options to do. If you're going through a traditional lender, my opinion is talking to the client, discussing with them, do they like a short-term loan, whether a 1 year, 2 year fixed, knowing what they're going to be paying in payments every month, or you go through a variable because we have reached the point of peak of the market and you're going to be paying less in the future.
Okay, so personally, I would probably selling a house tell my clients to take a variable rate and then fix it when we feel it's at the lowest. Do you think that's good advice?
I think that's great advice just because right now I think prime in the end of it 2 or 3 years from now is going to hover around 4%. It's never going to be how it was during the COVID pandemic.
Right, because those were historically low rates that will not happen again.
Correct. And during COVID, it increased the entire market by 37%.
Right. And it caused the market to inflate the prices very high too, because it was so low. And we're going through a transition now. It's been a very exceptional year, the past year. And I think going forward, making clients, buyers and sellers adjust to this new way of thinking that they're not going to go as low as they were, I think is the key, don't you?
It's all about setting expectations with your client.
Right. You know what? Smack on. The mortgage industry is so similar to real estate too, because they're connected. What about first-time home buyers? Okay. What would you suggest to a first-time home buyer that wants to get into the market?
So right now, when it comes to a first-time home buyer, the first thing I ask for is for all the documents, trying to understand their affordability and their savings, whether we're going to go into a conventional mortgage where you put down more than 20% and they have the possibility to purchase something for $1 million plus, versus if they don't have less than 20%, it's an insured mortgage and they could put down anywhere between 5 and 20%, 19%, but they have to purchase less than $999,000.
What's the difference with a purchaser going to one of the 3 big banks? What do you provide in your service at ClearTrust, Cristiani Mortgages? What do you provide to the client different than someone going to a bank, one of the big banks?
So right now we have access to the 5 big lenders on the A side. Everyone has their own policies. So say Scotiabank, they have a high net worth program for people that they don't claim that much on their T4s, but they have strong business financials.
Oh, I've heard of those situations.
Versus TDs, more of a conventional route. And if you just go to one lender, say like a TD, they only have access to certain programs. They don't have access to the other programs that are offered by the other banks.
I wanted to touch back on what you said about Scotia. So we have clients maybe that are high net worth clients, and you're saying their T4s aren't big because they don't take a salary.
Correct.
But they have income properties, high value of assets. So that type of person going to apply for a mortgage, if it's based on their T4, might not qualify. But yet, so you're saying Scotiabank they look past that?
Correct. Scotiabank and BMO are looking past that right now because they actually look at their liquidity in bank accounts.
Right.
They look at their business financials over the last 2 years. They don't focus on the amount of dividends they're pulling every year.
Very interesting. So, and Royal Bank doesn't either, do they?
No.
Okay. So that's the advantage of coming to you.
Correct. Because we could shop it around to multiple lenders.
And you can even go to lenders, can you be lenders? Are there such a thing? Like you go to the big banks, but do you go to other private equity firms to get mortgages?
Correct. So we have alternative lending options like B lenders, say a Home Trust, Equitable, where they look at stated income. So stated income looks at, say, a lender or a borrower doesn't have that much income to show, but they have a significant amount of deposits over the last 12 months within their business. We could qualify that. We could qualify the borrower based on the deposits within the income.
Okay.
And then we also have private mortgages where it is more about a short-term solution. Say if they were to have bruised credit, they can't get approved by a B lender. And the short-term solution would be to place them at a private lender and then slowly move them over 6 to 12 months later.
So you tailor solutions for any client.
Correct.
That's why we work together so well.
Correct.
Right? I want to talk a bit about our new situation in Toronto with the increase in taxes too. So Olivia Chow has proposed an increase in property tax. And, there's all kinds of taxes. We're so taxed in Canada, but now in Toronto in the 416, we have more land transfer tax. Now we're going to get an increase in property tax. Are you seeing worry? What are you seeing in your business as an effect of the tax rates?
Well, we always have to qualify individuals based on the annual taxes when they're applying for a mortgage. So now we're going to be looking at applicants that can afford less because with the increase in taxes, they're going to be going up by 10% in Toronto. And if they're not subsidized...
Property taxes.
Yeah. Sorry. If they're not subsidized, it's going to be going up 16%. So they're going to be able to afford substantially less because we have to take the property taxes into the equation.
Right. And that's all those taxes are the 416 as well.
Correct.
Where there's been, as far as real estate valuations or appraisals, we've held value better than what's happened north of the city because of the effects after COVID,
Correct.
right? Okay, so you know what? Jason, we've gotten to know your family. Well, your your in-laws have been
Yep.
clients. We've transacted in real estate. You're a warm, beautiful family, and you have a baby, Luca,
Yes, I do.
and you have a beautiful home. I wanted to ask you about your house. Like, how do you feel about home? We're in the business of selling houses. This podcast is Beyond Four Walls. How do you feel about, what's the most important thing you feel about buying a house?
It's about cherishing family, growing with the family, growing with the house. It doesn't
I love
always.
it.
It doesn't always mean that you buy the house to live in, but you could always buy the house to grow with the family.
That's awesome. I agree with you 100% because our core values of our family is family, even our business. And I know yours is family. And I think family is so important. And what you have in your home, it's not about the size of the house. It's about community. It's about your lifestyle, right?
Correct.
And where you're going to bring Luca up. What is the favorite room in your house?
I think my favorite room is definitely the kitchen. Just because
we all love to eat.
we all love to eat. We all like to cook.
That's why Jason brought pastry.
We all love to cook, and we all get to spend time together in the kitchen.
Isn't that great? So in business, do you feel like when we sell a house, I get very close to my clients, even on the vendor side and on the seller side and the buyer side. In fact, sometimes we get so connected with our clients at the end of 2 years, maybe they've shopped for 2 years, and I get sad about not continuing that relationship. And I end up like, we continue the relationship because for the future, you always continue. But it's sad that you don't see people on a daily basis because your core values are family and relationships. How do you feel about that with the clients that call you for mortgages?
I think it's all about just keeping in contact with them, right? Because it's all about referral sources with them and growing your network through that.
That's true.
It's all about the customer service you could provide them and having that source that they have comfort with you, and they could relay that to their friends, their family, to have that trust right off the bat.
Well, that's why you're so good at what you do. And I think that's why our brands align because we have the same core values and referrals and keeping contact and doing a great job for someone, like going beyond the transaction and giving that little special extra that makes them feel comfortable in what you're telling them. Because we're selling real estate, which is people's biggest investment usually in their life, but you're selling a mortgage. Like, you're selling it.
Yeah.
Is that correct?
Yeah, it's also a transactional. It's not only transactional, it's about trying to help the client as much as possible in the situation they're in at the time and how to set them up financially in the future.
We have a lot of first-time home buyers that don't have a huge income, that don't have a lot of money saved, but they want to buy their first property, and usually it's a condo. It's a starter condo, or a very small house in an area where houses are under $1 million in Toronto is not easy because the average price in Toronto is about 1.1. But let's talk about what advice you would give if I referred another first-time home buyer to you in this market.
So with a first-time home buyer, what I would really, really ask and emphasize is to get all your income documents aligned. So income documents say on how much you earn on a regular basis. So get your letter of employment, get your pay stubs. If you earn commission, we could look at your 2-year average on commission. But one of the first questions we have when it comes to down payment is, can you get a gift from parents, family, friends that would help for the down payment and help for your affordability?
That's so important today, and we're hearing it more and more. We're hearing, and my generation saying they have to help their kids, and they're saying, well, I'm not going to take that big, huge cruise with, because I want to help my kids. I want to help my kids get into the market. So I think that's become very common now, isn't it?
Correct.
For people that can afford to help their kids, they're helping their kids, aren't they?
Yeah, at this point. And I think a lot of parents have kind of come up with the expectation that they're going to have to help their kids if they're in that financial situation and be able to do so.
So again, it's expectation. Again, it's about creating expectations with clients and buyers, and right about what it takes.
And I think it's about having that first call and starting to talk. Not getting any information about their financials, but where they kind of stand.
So like that first call is like your what do you call it? Like we do it like
it's a discovery call.
It's a discovery call. So we do that too. A discovery call is the best way in your mortgage business as well, right?
Correct.
Because you can feel out where you can go with them. That leads me to another point. So today, this year, there are a lot of our clients whose mortgages, they were on fixed mortgages and they're becoming due this year. And a lot of them are wondering what should they do. What advice would you give in general to somebody has a mortgage to renew this year?
So right now, there's two different ways to do it. I'd either go a 1-year fixed and you see where the rate's going to be next year.
Right.
Because everyone on the Bank of Canada is predicting it to drop at least 100 basis points for the next year, depending on...
So by 2025, January,
yes,
say,
correct.
It'll be down a point, 100
correct.
Basis points. Okay.
Correct. And then you come out on the variable side on the other side of it. Or...
So you take a variable and wait till things are...
kind of cool down and then you locked... Well, we never know the bottom.
You never know the bottom. Okay. So you have to, at a certain point in time, you guide them. It's time now
Correct.
to move from a variable to a fixed. That's when I reach
your
out. Expertise.
And that's when I reach out to my clients. I have my CRM. I look at all the information that they have, whether they're in a variable, when they're in a fixed.
So you use a CRM just like we do in real estate. We use a CRM. I guess it's such a good tool, isn't it?
It's the best.
It's the best tool. I know it takes so much time to set up though. Oh my God. Okay. So I'm going to use an example now. Say I have a client who has a house that's probably worth 2.5 to 2.7. Right now, they have double salary. Their family is growing. They don't have a big mortgage. It's probably $500,000. Let's say, for example, it's $500,000.
Okay.
To take them to the next step, they probably need to spend $4 million. So I'm referring, for the viewers, for the listeners, give them an example of how would you advise that couple with this growing family now, and to go into that range, that price range, and give me, probably there's two different scenarios, right?
Correct.
That you could.
So regardless, I would also recommend putting down 25 to 30% down regardless.
Okay.
Just
in addition,
correct,
for the move up.
Correct, because it alleviates some of the mortgage size.
Right.
When you're moving to that size of house, the lenders often want to see at least 25% down.
So in addition to the sale of the house,
correct,
they want to see another
25%.
25%. So you're better off to pay off your mortgage maybe and have no mortgage.
Correct.
And then
from the proceeds of the house. And then put down the down payment from there.
Okay, so for example, then there's $2 million net. So they're going up to a $4 million house after the mortgage is paid, right?
Correct.
So what type of lender then? So now they've got the right down payment, right? From the proceeds of the house. So they're taking 2. Where would you go for a mortgage for, like, what 2 scenarios could you give that couple for a mortgage?
Depending on if they qualify for a lender, we have to look. Traditional banks look at 44% of your total household income. If we look at a non-traditional household where we have to go to one of those programs such as a stated income where they only have cash deposits for the last year, they don't claim that much money on their T4s or their NOAs, we'll take them to the B lender and we could stretch those ratios up to 60%.
Wow. That's a big ratio. 60%
of their household expenses.
And so basically, well, you know what? It's a different world out there today in the world of mortgages, isn't it?
It's crazy.
It's a really, it's so different. And, when I look back at what was happening when they were are like very low, that actually hurt, I'd say, our society.
And we're seeing the effects of it today.
Right? I'm not wrong. Like, you agree with me, right? It hurt our society.
100%. Because during COVID, we have the relief to bring down everyone's affordability with everyone losing their jobs.
Yes.
So we had CERB, we had all,
right.
All the injection of capital within the market.
Right.
And now everyone's feeling the pain because inflation's gone up. Bank of Canada's raised their rates.
So how do you feel then? Excuse me, as a young person who's single or married, young person who's saving to buy something, and all this has gone on, like job losses, their spending habits are so different. Like I'd say the people in their 20s, cold plunge places are $50. Like they go out to eat, it's a fortune. Everything's a fortune.
Right now, it's minimum $200 to go eat.
So how are they going to afford a house? What would you recommend to a young person that's 24 years old? How, I guess, adjust their lifestyle.
Go back to the basics.
Right. And that's so smart.
Spend, come up with a budget. Come up with a budget, put a certain amount away every month and stick to that plan.
So for the saving part, like live their life, be careful. I was listening to another podcast and it was Kevin O'Leary, and he said, and he's like wealthy, successful businessman. And he said, everything I spend my money on, I think, do I need this? Do I want it? Do I need it? There's such a thing as having enjoyment and pleasure, and we all need that. But there's also an attitude that you have to have is, I have a goal to buy a property. Maybe I should be putting away so much a week from my paycheck, or biweekly or monthly from my paycheck, or have it automatically withdrawn so it gets saved. So eventually they have a goal that they can meet.
Correct. And it's always, if you're going to purchase a house, throw it in the RSPs.
Right. Throw it in RSPs or save.
I think put in an RSP because you can't touch that money.
So you save that. But also they say TFSAs, if you save those, you can cash them out when you buy a house.
Correct.
So it's a way for your
setting them up for the financial future. That's
awesome. Jason, it's been an incredible time talking with you today.
Thank you. Pleasure to be here.
Well, I've learned so much. Thank you. And it's such a pleasure always getting together with you. And we'll work together in the future, and we'll just get all those clients a mortgage.
We'll keep going.
We'll keep the sales going. Thank you so much.
Thank you.